What's up everyone, welcome back to a new video on the Alien Hour channel. Today we'll be going into a more educational video. Like I announced on Twitter, I will be explaining how you can analyze cycles. Because this is a thing most people struggle with. And I haven't explained this concept yet. I do think there are a lot of videos about this explaining it, but I will just simplify everything to the fullest. So, there are a couple concepts I want you guys to look at. The first concept is the simple ladder structure, where we, in a move, let's say you have made this. Now there are 2 points we are looking at, the high and the low. So next up, let's say we move to here and we break below. Now we expect it to move either this direction, where it needs to hold this level, or we get a quick move and a reclaim and we hold above it. And then we move. So what points are we looking at in this case? The highs and the lows of those staircases. This is concept 1. I want you guys to understand. So when you look at price action, you look at 2 different points. So per staircase, let's say this is staircase 1. I will use the magnet for this. Annoying little magnet. We have the low and you have your high. And you already, I think, see the concept where this is the exact high. And you come back into that high and then you get your continuation. Where do you reject? You reject on that previous high and then you find acceptance back below it and then you go down. So this is concept 1 I want you guys to look at, the ladder logic I call it. People call it market structure, candle analysis, or however you like to call it. I just call it the ladder logic. Because you do it from step to step and you look at both sides of the ladder. You can also call it a staircase, whatever. It's just the same concept. Concept number 2, ranges. With ranges, people like to draw it like this, but it's rarely like this. Usually a range, something like this, where you have a little bit of compression, you maybe deviate from it a couple times, and then you go up. Okay? So ranges and staircases. These are the things that markets are made of. Because we have 2 different types of markets. We have trending and you have consolidating, meaning a range. Here you see a range on the lower time frames. Here again, you see a range. After this range, we start to trend a little bit and we get back into that new range. We trend again. We get into a new range. We trend again. You form a new range. You break down from the range. You start ranging again. You start trending again. And we start to range again. So, this is why I tell you guys, look at ranges and look at staircases or ladders. So, now let's analyze the cycle. Because this is a thing it's almost bad to show this on a video, I think, because this is one of the things that is really good to do on yourself as a test, where you analyze the full Bitcoin chart. And then when I say full, just start at 2013, because everything before that is just straight up and this really is not a proper market cycle. The only thing that can be found here is that same logic. So, look at those staircases. What is your staircase? This is the low of the staircase. This is the second part of your low of that staircase. Then we take the high of that staircase. And you already see that both have been respected. Super simple logic. Right? And what do we get here? We get a range. So, you have your top. And what is the high of that range? This previous staircase. And now I'm analyzing it on a weekly. So on a daily, you need to think this really was a new micro range in between, where you later broke down from, retested it to confirm this as your resistance. So here you see it consolidating right here, and then it starts moving up on that reclaim. Look, where do we get back? A previous staircase. Okay? So now, these are the two concepts I want you guys to look at. So when we look at that staircase again, you have the steps. Here again, you have your steps. Right here. And we need the high of the staircase as well. Look where you later get back into. Into this staircase. This was your consolidation, right? Where this was your extreme high, this was your range high, this was your range low, this was your extreme low. And look what happens. You get that massive trending market. You start to get the staircase logic in the downside, where now this low, low, high, but this is lower than this one. The next high is lower again. This one is lower again. What do you get later? That bear market. So, and where is the bottom form? In that previous consolidation. Right here. You get back into these levels. See how we get back into there. And this again, what happened? You get a new range. Yet again, what happens? You get your break with a retest. Start to grind a little and you go further up. You form a new range. Right? Okay, I think you guys already see it coming. Yet again, we got into a trending market for a couple weeks. You start to chop down. Where do you end? Again, at those highs. Like the staircase logic, you look at the highs of a staircase and the lows of a staircase. So if there wouldn't have been any buying pressure here, we would expect it to go into here. And expect a reversal from here. Okay? Now I will fully clean up the chart again. And I will go onto the more recent cycles. Where there is one logic that allowed me to buy this bottom. And it was quite clear for me. I don't know how many people know this, but I think this is common knowledge by now if you're inside of crypto, that this is a very simple concept. Your bear market usually is right around or above the previous all-time high. So let's look at the 2017 cycle. This was your high. And let me perfect it some more, because your high was this exact candle. Where did your bear market low happen? You two guys tell me. Right here. And what pattern occurs? The 1, 2, and the 3. Yeah? So what did I do? Because I can tell you guys, this is where I came into crypto with a very small amount of money, because I was still quite young and did not have, I was still in school, those sort of things, did not have a lot of money back then to invest. And I still was on that side of this being a full risk market, and I was like, okay, yes, it's not good to take risks, so I only put a little bit of money inside of it. Yet on this move, I made a decent amount of money from a very minimal amount. There comes the interesting thing. Here I sold a bit, here I bought a bit, but here comes the error. Here I sold a bit again, here I bought a bit again, here I sold a bit again. I literally sold the top. It was like 68k, somewhere like that. But here comes the interesting thing, because I did not make my money in this part. No, I made money in this part where it was easy. And you can already guess from the point, what was I doing on this way up? Annoying little fuckers. Okay, trading view is working again. Right. I had a little glitch right there. Okay, so the thing I did, I was selling the highs and buying those lows. Selling the highs, buying those lows. So can you guess what I did? I sold the high. I bought what I was thinking was the low. Because this time I was not educated properly, like knowing that this was a clear top signal. Yes, I did not have the education, I did not have the knowledge to know this. So what did my ass do? I sold here and I bought back here. But now comes the interesting thing. Here you make 20 extra money, 10 extra money, whatever. So let's say I only put in $100. This turned into $2,000. Yes? So what are you doing now here? Now you're buying with $2,000. Oh, that's 200. 2,000. Okay, let's look at this because some people are gonna laugh and be like, okay, yes, but I want to be straight up and I want to explain this concept. So, what happened here? Right when I bought, and I was thinking I'm smart because I made money on the way up, I bought again, but now I bought with way more money. And you can already see what happened. Minus 20%, even minus 30%. But when it closed below this, this was my bear market line. And I told myself, if we get below this, the bear market will start. And technically, of course, it already started here, but you cannot confirm that the bear market has started here. So, what did happen? I'll leave this right here. So, now think, what did I do? I bought here again with $200, with $2,000. And here, I got minus 20% within a week. So, note how I started with a very minimal amount, made it into a big amount, and then you buy one dip where you think it's a dip, but really it's the crash. It's the major reversal. And now, look at what I lost already. 200. Well, 400 even. Which was way more than I had invested in the beginning. So, what do you know when the market is shifting? What do you do? It's quite simple. This was my target, which if we break this, I expect the bear market to start, right? So note how this went from $2,000 into $1,600 in a matter of a week. Yes, a matter of 2 weeks actually. And here, what did I do? I accepted the fact that I was wrong here. That, well, here I was wrong. So my idea got invalidated here because I was simply expecting this. Where we just continue because I believed everyone who was saying, yeah, Bitcoin will reach $100, $100,000 this year. Well, it did not. It did this cycle, but not previous cycle. So what did I do in this part? With the staircase logic, what do we look at? Those consolidation periods, meaning those staircases. So these parts, this is what we look at. So in this case, what this happened, this was the staircase I was looking at. And I accepted the fact that I was wrong and that the bear market would be starting right here. What did I do? So this staircase, I drew a box from here to here. And I DCA'd this entire zone with a short. And I remember this quite vividly because this is what made me the most money. I did not make my money on the way up. I made my money on the way down. Which is why I always tell, when you haven't made money and the top has been in, most people just leave. Well, this is where I made the most money. So, what was my trade? My trade was a 20x leverage. Okay? But then is the question, where do you exit? where do you exit such a short? The top, the previous top. And I expected it to be right around here. So my exit was right around here. And now I did a quite ballsy move back here. Because I accepted the fact that I was wrong, and I was like, I'm young, I can take the risk. So what did I do? When I shorted this, I used all of this. All of it. So now do the calculation. I won't even do it live because I don't think this is useful. But here, do this. You look at this move, 56.98%. Actually, it was less because my TP was right below 20k right there. So it was 65%. Do that times 20. Do that percentage gain times 1600. Then you know what I made on this way down. So with this, what can we do? We now know how markets structural move using the simple staircase logic, where you look at the highs and you look at the lows, right? So you look at these parts of the staircases to confirm what will happen after. Okay, with this, now we know that most bear markets come back into this, into your previous all-time high. So now let's say we are trading right here. And this is not me saying, okay, now a bear market will begin, because I don't think it will. I think it will be somewhere start of next year, maybe end of this year. But let's get into the track back into the macro analysis. But I wanted to explain this concept so you guys know that if you haven't made money on the way up, it really doesn't matter, because you can make money on the way down as well. So, with the same logic that we did in 2017 to catch this bottom in 2023, how can we approach this again? Now, where do you think a bear market will be? Right? Because let's note here as well, it was above. Here, in between. So, where do you think the bear market will be? My bets? Right around this level. And then we start to form some sort of new range, because by now you should know every local top or cycle bottom or local bottom is usually a micro range. Look at this, this was a range. Look at this also was a range. When we look at this here, a key pivot, also a range. This again, where do you come into? Those previous highs on this drop. Come back into these previous highs. So, this is the simple staircase logic and the ranging logic. So, how can we continue with this? And how can we simplify it even more? I've shown this multiple times. The simple EMA scanners. Because these things can't lie. So, I removed this 50 EMA because I find this to be not really that useful. And I want to know the longer term trend, the 100 and the 200, and the short term trend, 12 and 21. So now let's turn this on, and you will quite quickly see how this is working. So, when we will start here, you see how the crosses happen, right? And now add the staircase logic to this. What was this? Your previous staircase. You look at the high, you look at the low. Here the cross happens, right around here. Where did you come back into? That previous staircase, and you continue your bleed, right? Okay. Now let's do this the opposite way. Okay. You see the cross right here. Where do you get back into? Previous consolidation. Yes. Crash. Up. And where are the EMAs again? your lower time frame trend shifted here. You can be aggressive and just buy on that flip in most cases, but I like to have my confirmation, and I really prefer buying on red days than on green days when you are talking long term. When we're talking about leverage trading, of course, this is a different thing. Now I'm talking about macro analysis, so this is a different breed. So now let's just remove all the levels and just make this as simple as possible. What do you see? It's deviating below that 100 and 200 EMA. It reclaims it while this is flipping, the short-term trend. And this stayed bullish all the way, right? So here we conclude the long-term trend is up, we reclaim these EMAs, and the short-term trend has flipped bullish. We get continuation. Okay, here again, you catch support, you start to form some lower time frame range, and you move up again. And this is why I tell you guys, no indicator on itself is the best. You need to combine it with other things. There's a well-known saying, one indicator is no indicator. So now let's look at this again. We deviate below the 100 and 200 EMA. We reclaim it slowly. The lower time frame scanner flips again. You retest this while coming back into these previous lows. Yes, and we move up again. Okay, now it is retesting the short-term trend again, while retesting these previous highs. And we move up. So, now people always say, okay, yeah, but this is easy in hindsight. Well, do it. Okay? It's literally quite easy when you think about it, but it's harder to execute because of the emotional part of the brain. So, now let's look at why I put my whole, by that time, this was my, like 90% of my net worth. Why did I have the conviction to short this? One, because of the market structure, the logic of the staircase, where I exited here for a 20% loss, which for me was, that 20% loss was 4 times my initial investment. So, you can assume this hurt me back then. But here, I concluded, if I am wrong in this case, and this was not the dip, then this is the start of the bear market, which was confirmed by these lower time frame EMAs. Yes. And where do we come back into? That previous staircase. So here you see these two things just lined up perfectly, giving me that massive conviction in my plan. And here, when that bottom happened, we went below the 100 and 200 EMA. That short-term trend flipped bullish, and we even retested it. But what did you really retest at the same time? This previous high. It's your old staircase. Yes? And now, later, we flip it, we move up, we chop again. Where do you come back into, guys? That EMA scanner, the 100 and the 200, you are now flipping it. Okay, you retest your 200 EMA while getting back into that lower time frame trend. Wow, retesting these previous highs. Okay, now, here you move up again. Where do you reject? Your previous high. And you move back towards those range lows and that EMA 100 and 200. Okay, this part. What do you retest again? This newly made low. It's your previous staircase, because the things with staircases, you look at the most extreme parts of it. So when I talk the most extreme part, this is not my main staircase. No, this is. This is not my main staircase. No, this is. So I look at the most extreme candles. It's just the same logic as with people use with order blocks. But this is just based on the candlesticks. And again, you move up. Now, we retest the scanner again. What do you retest, guys? This with your previous high. You barely front ran it. and you see on a weekly, because I know a lot of people shit their pants here on a daily time frame because we closed above this, closed below this. Well, I was just looking at the scanner and I was like, why the fuck are people bearish? Because it's clearly still up. And then the weekly closed like this, and here everyone flipped bullish again. So I was already in longs right around here. Well, the masses started going long right around here after this weekly close. Because this close clearly closed above this line, while the daily closed below, making everyone panic again. So this is the concept I wanted to show you guys, and you can clearly see how this keeps continuing. Where you look at those previous staircases, if they hold, you most likely will go up. If they break, you most likely will go down. Now, staircase. Next staircase, okay? The logic is really not that hard, but you guys need to understand the concept. And just look at this again. We crossed once on that lower time frame trend, while the higher time frame trend was clearly moving up. Okay, and here, what do we get again? You get the staircase logic by now, I hope. We haven't moved towards the downside. Now we do this. Where are we wanting to play? Either we look for this, or we look for this, where it moves to here, into that previous staircase. Usually the staircase has the high and the low. So let's draw it a bit better. Where you have these 2 points. I'll do it the other way around to make it a bit more clear. Where you have these 2 points. Okay, if it trades into here and it does not break above it, you just expect it to move towards the downside. Okay, so now let's say the other way around happens and we get something like this. Now look at this. Okay, so when we look at this again, this was the same thing that happened here. We had this point which proved to be a support here and here, and we had one close right below it on a daily time frame. I'll zoom in on this. So what did everyone say here again? They were panicking, saying, okay, crypto market is over, this and that. And what did I do? I just bought. Yeah, and you see how it worked out later. So this is a quite simple way to just analyze a cycle. You just look at those major pivot points. So I'll quickly do it again. I will point most of them out. I will try to do it a bit faster. Where these were your extremes. Here again, this was your extreme. This was your extreme. Right here was one. Hey, look. This is where everyone panicked again. Yes, it's a previous staircase, guys. We really don't have to overcomplicate it, because we can do it like this. We're only looking at this part right now, yes? Okay. Previous staircase. That extreme that started the sell-off. Now we take this, we extend this, look again. What happened? You started consolidating below it, you broke it, and you keep moving up. What happens later? You get back into that staircase. Right here. Well, this was almost this high at the same time. And this logic just has been working for multiple cycles, guys. I really can't make it easier than this. Where you have your staircase, you have your highs, and you of course also have your lows. So with this, you already see it. we get the exact same reactions. See how we consolidate below these? The moment we really flip this and started breaking, we start moving up. Where do you get your first real resistance? Your previous all-time high. You start jumping again, and you break it, and you move up again. So, now, what did we get, bros? It's, I can't, I just have to laugh because sometimes it's just really this simple and people don't understand it. Well, this is just the most basic way of analyzing levels, right? You just look at those previous pivots. And I just call them staircases because that's really what it is. Because if the trend starts to shift, you usually make 1 point lower, like this, and then this happens. And now you broke this. Now we expect it to retrace either back into this low and dump further down, or we go into that recently lower high, and then we reverse. This is the most simple way of analyzing markets, and it's just the staircase logic. And how can we apply the staircase and confirm it with this? Now we don't have it proper. So let's say we're here. Let's make it even harder to guess. We're here. Now what do we expect? Because this is a big thing people have a problem with, I find. They see this as your break of structure, which technically, if you watch the books and you watch YouTube videos, it is. But when does a trend really shift? When both of the steps of the staircases have been violated, meaning this was your high. I'll redo it a little bit. When this and this. Now, this is point 1, this is point 2. So when we get this can still happen, where we just keep moving up. But now let's say you get this and you fail. Now we have a real shift. Because now the low is lower and the high is lower. So this is a concept I really find important to know, and I stated this a couple times before where I explained this concept, but this is the way to analyze cycles. Now, when we do this on a monthly time frame, it's even cleaner. And I don't think most of you actually watch that monthly, because it really sums up an awful lot when you look at it like this. And now let's look at that previous cycle again. I really can't overcomplicate it, because it's quite simple when you analyze it this way. Now let's look at those lows of the staircase. See? The low of that staircase. You flip it and you start that bull market. Right? So now, I hope you guys understand a bit better by this how to analyze cycles and how to utilize these trend filters with a shorter term trend and a longer term trend. And for this to work the best, I would say use a monthly, use a weekly, and use a daily, because otherwise you're just more swing trading instead of analyzing macro base. For, let's say, ETH. I think I have a better one. Yeah, we've got something better. Let's take Chainlink. And I will remove this. Here, what do we see? I will first remove these EMAs and I will start at a weekly. You already should see it by now. When we look at this part, okay, you break your low, you make a lower high, and this is where you start that bleed. And this, of course, we see as a trending market. this is a clear ranging market. And after the range, you get back into a trending market. You start to range again. Start to trend again. Start to range again. Where do you start rejecting again? That previous lows. And you bleed further. And what happened here again? With the staircase logic, you have your low being violated. Yes, you have this low being violated. I mean, this part of the low. Now you have this high where you come back into. So now you have made a lower low and a lower high. You have cleared both sides of the staircase. And you continue down. You form a new range and you go back into a trending environment. So this I wanted to get across. I hope you guys understand. And I hope you guys liked the video, of course. So with all that having said, guys, have a nice day. Keep trading. I wanted to push this out as quick as possible. So most of you guys think it's only possible to make a shitload of money on the way up. No, it really is not. I made more money shorting the whole markets than I've made on the way up. In previous cycles, and I did the exact same in this cycle. I made more money shorting coins than I made longing coins. So, I hope you guys liked the video. Next video will be mainly based on for the educational part, of course. The daily markets updates will keep coming. But for the next educational video, I will focus on lower time frame execution. But for higher time frame execution, it's really easy just to combine the ladder logic, the ranging logic, with simple trend scanners. Because this clearly tells you whether momentum is with you or against you. And then you add your technical analysis to this, and you are kind of unbeatable if you don't let your emotions screw you over. So with that having said, guys, I hope you liked it. And like usual, keep trading, guys. Goodbye.